Support and resistance levels are critical price points on a chart where the forces of supply and demand changes significantly. Imagine a rubber ball bouncing off the floor. Each time it hits the ground, it springs back up. Similarly, in the trading world, when the price of an asset hits a support level, it tends to bounce back. And when it reaches a resistance level, it's more likely to reverse its upward trajectory. Support as a safety net. Support levels act as safety nets for falling prices. They represent zones where buying pressure becomes strong enough to halt or reverse a downtrend. This might be due to a psychological price point, such as a round number, or a level where buyers historically stepped in. At support, demand overtakes supply. Hence, it is also referred to as demand zone in demand and supply trading. Resistance as a glass ceiling. Resistance levels, on the other hand, act as glass ceilings for rising prices. They indicate areas where selling pressure becomes dominant, preventing the price from climbing higher. Just like support, resistance can be based on psychological factors or historical price interactions. At resistance, supply overtakes demand, which is why it is also referred to as supply zone in demand and supply trading. How to use support and resistance. Imagine a trader as an architect designing a trading plan and support and resistance levels as the foundational blueprints. These levels guide traders in making informed decisions about entries, exits, stop-loss placements, and profit targets. Entry points. Look for opportunities to enter positions when the price approaches a support or resistance level. If the price is at a support level and shows signs of reversal, like a reversal candlestick pattern formation, it might be a good time to enter a long position. Conversely, if the price is nearing a resistance level and shows signs of weakening, a short position might be appropriate. Stop loss and take profit. Support and resistance levels can help traders determine where to place stop loss orders to protect their capital. For example, if entering a long position at a support level, placing a stop loss slightly below that level can help minimize losses if the support fails. Take profit levels can also be set near upcoming resistance zones for profitable exits. It's a good idea to book your profits at support or resistance levels because at these levels the move is expected to reverse. Confirmation. Support and resistance levels gain strength when they coincide with other technical indicators or patterns. These confirmations can enhance the probability of a successful trade. For example, a reversal candlestick pattern formed at a support or resistance level will be much more effective than if it was formed somewhere else. In trading, success hinges on understanding and mastering the fundamentals. Support and resistance levels provide traders with the blueprint they need to construct profitable strategies. By recognizing these critical price points, you can make more well-informed decisions, manage risk effectively, and navigate the tumultuous waters of the financial markets with confidence. Please subscribe to the channel and like the video if you found anything of value. Thanks for watching.